Good morning, everybody. It's Friday, May 9th. We're about 15 minutes before the markets open here in the US. My name is Namaan, joined by my colleague Jenny Rae. We're back for another edition of Market Outsiders. Today, we're going to be talking about this weekend's upcoming art auctions at Christie's and why you should or shouldn't care, and just some of the economics of art, which I find really fascinating. We're also going to be reflecting a little bit on the contours of the US UK trade deal that was announced yesterday morning. Jenny Rae, how are you doing this fine Friday morning?
I'm good, thanks. Glad that y'all are joining us for Market Outsiders. We started this whole conversation because we spend a lot of our time in the private markets thinking about things that impact people, but that aren't contained inside core metrics that we often look at, like the trading of the public markets, or even in today's case, like the measurement of GDP. So that's why I'm talking about art, because I want you to understand how it's actually not included in GDP and why it still matters as a metric. And so I pull, as you know, we pull headlines and business news from every day to talk about how we interpret the information, because the way that the headlines sometimes interpret them is not the way that we interpret the news, the message, or would convey that as advice to the senior professionals that we work with in a lot of organizations. And so we want to translate this for you so that you understand where we're coming from. So I'm going to just read a CNBC article this morning from their Inside Wealth, which is focused on high net worth individuals and investing. It's often about the kinds of markets that Naman and I actually see a lot. Then we're in the consulting market, which is almost never publicly traded. We see a lot of legal markets, those are almost never publicly traded. A lot of these businesses that are leading indicators of how the market does. And I would argue that art is one of the same. So this was the title this morning. The art market offers investors an escape from volatile stocks, Christie's CEO said. Um, I'm not sure, first of all, that the investors that are A, reading this, or B, investing in Christie's art are thinking deeply and dramatically about the value of their 401k portfolio, right? Like, this is not a like the market's down 12% a year. I think I should go buy $100 million in art kind of consideration. So to me, that headline is a bit of apples and oranges. That was kind of where I started off. But my actual first like, intellectual question, which I did a little digging on this morning just to confirm it, my hypothesis was whether or not art is actually included in GDP. We've talked about the contraction of GDP in the last month because of a pull forward of imports. We've talked about the labor market indicators. So when we see these kinds of things, it's just like, where does this number fly into the economy? And is it in GDP? My original hypothesis was no. And so here's the kind of subpoints, right? Christie's, Sotheby's, and Phillips are together offering 295 works at auction next week for a low-end estimate of $952 million combined. Any gain would be a welcome change for a global art market that has been in decline for 2 years. That I do think is very important. I'm going to come back to that really quickly. And then in an exclusive interview with Inside Wealth, Christie's CEO Bonnie Brennan and collectors view art as a safe haven in an uncertain world, and sales are poised for a rebound. So basically, what they're saying is art is like gold, right? Art is the type of thing that when the markets are either volatile or trending down, and there's concern in the traditional markets, you're going to see people flee into the private markets. Now, that is definitely true for things like private debt markets, when people pull their money into higher earning, stable, securitized, kind of functions. But the art market is a little bit different because this $952 million is on the resale of art, not new art. This isn't the first time that the art has come to auction, which means that it doesn't contain a GDP indicator. GDP is only the first time something is sold. So, for example, car resale is also not included in GDP. The US car market for resale cars, not included. But even more importantly, I think that's really the key, right? The global art market has been in decline for 2 years. The expectation that they're trying to boost is that in this kind of market, this is the time when you should buy these things. I would argue that the global art market may be in decline for other reasons. because there are other safe havens for cash, not just art. So 100 years ago, right, art would have been a very traditional safe haven, but today there are many more safe havens, including real estate, including this very large services economy, private business sector that spits off cash on top of a lot of its kind of, capital benefits and tax benefits as well. And so, I'm not 100% sure, and I'd love to do a deeper dive if I had more time into why the global art market has been declining. I doubt it's just because the stock markets were increasing over the last 2 years. Naman would love to go to you on this.
Yeah. So Jenny Rae, when I see that headline, I'm like, oh, that's just marketing spin from the CEO of Christie's,
100%.
right? Like he is
And good for
seeing
them, by the
good for
way,
them.
right?
Good for them, right? He got a megaphone and he used it to share his point of view and his perspective, which is we're in a time.
Naman, she got a megaphone.
I'm sorry. I thought I heard you say he. So she got a megaphone and she shared that, look, in a time of uncertainty and market turmoil, you should flee to art. Well, if from her perspective, of course you should flee to art because they get a
You
cut
should
of every
always flee
single
to art.
sale.
If
Yeah.
markets are
But
up, you made new money, you should flee to art too,
exactly.
right?
Exactly. I think what she's trying to say is that art is an inflation and turmoil hedge for the uber wealthy, which it might be in the long term, but what I actually see it more is just as a status signal, right? It's like buying a sports team. There's only so many Picassos, Monets, Cezannes that are ever on the
And
market at
Dallas
one time
Mavericks.
available for resale. Exactly, the Dallas Mavericks. Am I buying a piece of art like that for its like long-term store of value potential? Maybe. Am I buying it because I want to say that I own it? Definitely. Right. And so I think, there's a lot of kind of measuring that happens among the uber wealthy, and art is like a measuring stick for them. And I don't think that you can come out and say that as the CEO of Christie's, but what you can come out and say is, look, this is a long-term store value that appreciates over time. It's a hedge against turmoil and volatility. I would say art is a highly illiquid asset. And you have to be okay with the illiquidity. You have to be okay with long holding times and holding periods. And so, it makes sense for some, but there are ways to be hedging against volatility that are way more liquid, right? There are gold ETFs. There's just keeping cash on the sidelines. Like there's a lot of different ways that you could achieve some of the same goals if your goals were purely financial. And I would say in the high-end art market, your goals are almost never purely financial.
And I would say that the rise of these like mini private equity organizations that where family offices are deploying funds into, and the purchasing of private businesses, like a lot of the ones that I've either looked at or been a part of in the last number of years, is a big part of that because in those you do have a store of value just in the business value. That's highly liquid, just like art is, but you have cash generation
You have
over
cash
time
flow.
as
Yeah.
well, right? So and I don't know if anybody solved that issue with art, how you can make money off of art on a monthly or yearly basis. I think that some of the coins and NFTs were a little bit of a part of that, but I don't know that was substantial enough to kind of be a meaningful piece of the
I
equation.
think like a lot of sectors, it's the platforms that are able to monetize on a consistent basis. So like there are platforms out there that let you buy fractional shares in art. And so you and I probably can't afford a Monet. Well, I'll speak for myself. I can't afford one. And so, but what I maybe could do is afford like 1/5000th of one. And so what these platforms have done is they've acquired these pieces of art and then they sell fractional shares of these art. And of course, what do? They get a cut of every share that is bought and sold on the platform. And so I think it's just a lesson for all of us is that platform businesses are incredible cash flow generators. And oftentimes it's the facilitation of a transaction, that is the best business to be in. It's the rails, if you will. You want to be the rails, you want to be the picks and shovels because whether the art market increases or declines, you're getting your cut.
Talking about that, right? One of the most illiquid markets in the world is the real estate market. Berkshire Hathaway bought Berkshire Hathaway and renamed it the brokerage firm. And I've always thought that U.S. brokerage firms that take a cut of both the seller and the buyer's side of the equation on every real estate transaction have got to be some of the best businesses in America because it doesn't matter whether the market is up or down. You'll see higher transaction volume and you'll see higher numbers, but you literally make money on every deal, regardless of what is happening, just by facilitating the transaction of an illiquid asset. So we talked about Buffett earlier this week. We gotta bring Buffett back into the conversation every once
Always,
in a while.
always. Well, this is a little bit of an aside, but one of the things that we always tell people who come and ask us for business advice or even investing advice is that the less sexy a business is, the more profitable and the more attractive it probably is. And I was flying yesterday. I was in the men's restroom. I looked down and there's like urinal cakes and urinal splash guards in every urinal in the men's bathroom. And I literally just had the thought, I was like, how many airports, event spaces, offices, right, have urinals that require these splash guards that need to be replaced every X number of months or X number of years? And I was just there washing my hands thinking, what a great business that I never thought of before. And I was starting to think through like some of the services that you could add on to that, some of the some of the players that might be involved in this business. I mean, it probably is a very consolidated market. Somebody is probably very wealthy from the manufacturing and distribution of these things that nobody ever thinks about. And I was just like, it doesn't get less sexy than that, but it probably also doesn't get much more profitable than that in terms of product.
Look, at our winery, we have a porta potty in a part of our winery that is like less accessible to the bathrooms. And oh my goodness, like I think about it all the time. I'm like, man, whether or not we sell wine, somebody comes once a week to clean that. But we are thrilled to have them do it. That's not a thing that we are thinking about replacing. Every other thing that we think about in our winery would come before thinking about replacing cleaning that porta potty. And so it's like they put that porta potty on our land and brought it one time on a truck, and now somebody comes literally once a week, and we will never let it go. It is a coupon clipping contract. I also worked with Georgia Pacific when I was in at Bain in Atlanta. And I mean, paper towels and toilet paper is a pretty dang good business. You keep running out and you keep needing to refill it. And they have, if you ever notice, the next time, by the way, you're in an airport bathroom, Naman, many service providers have their own toilet installations. So it is actually a branded one that fits specifically with their unit so that you can't replace the toilet paper in it. You have to keep the contract going. So it's like the razor handle and the razor blades, but just inside the bathroom for the toilet paper. So, bathrooms offer all kinds of business inspiration.
That's a sticky business in more ways than one.
No, on, that's so inappropriate. But whatever,
Well,
it's Friday.
well,
So,
it's 9:30 a.m. Eastern on the East Coast. Markets just opened. One thing that I was reflecting on yesterday and just wanted to very briefly share about are the contours of the U.S. UK trade deal that was just announced. And, my initial reaction and what I've been sharing with our clients is that it's not much of a deal yet. It's just the contours of a deal. And I think the big takeaway for me is that the 10% baseline tariffs on other countries don't seem to be going away. My understanding was that the tariffs were going to be used as leverage to negotiate actual free trade deals. This on the surface doesn't look like a true free trade deal to me because the 10% baseline tariff on goods coming in from the UK remains. And so I think what we're telling our clients to do is adjust their expectations moving forward, that we're going to be in an environment where these baseline tariffs remain for longer than many anticipated. And I think, just as an observer of the stock market, what you're going to see is I think you're going to see a dip in the markets over the next few days as that news gets digested, because I think a lot of what have been priced into the markets is that, okay, these tariffs are going to be going away. And it seems like even as we're negotiating trade deals, there's going to be a baseline rate that remains. And really, what this deal seems to be to me is just baseline tariff rate of 10% with a whole bunch of carve-outs. So, carve out for luxury vehicles, right? Like those tariffs were announced at 25%. Luxury vehicles like Jaguars and Land Rovers coming to the UK will now be 10%. So they'll be tariffed just like everything else. Auto parts will be tariff free. And in exchange, the UK agreed to buy some Boeing airplanes, right? So that's a part of the deal that is truly free trade. But overall, it seems like the baseline tariff rates are going to remain. There are going to be some UK products that get freer market access in the US, and in exchange, there are going to be some US products that get freer market access in the UK. But overall, this is different than what I was expecting in terms of what some of these deals were going to look like. And I'm really interested to see moving forward is if this is a template for some of the agreements we come to with other nations, or if this is a special arrangement just with the UK.
I'm sure on Monday we'll have a report back from the U.S.-China conversations that are happening over the weekend in Europe. That will be, I think, a big hallmark of what we expect to see because, like you said, the architecture of these deals is a big question. Just as a note to everyone, we just put out our economic guidance for the consulting industry, and we said that demand is incredibly strong for consulting. We just want to remind you that macroeconomic markets do not always mirror what happens inside the consulting markets because consulting markets thrive on change. When change is happening, which is exactly what's happening right now. In fact, I would say the most consistent message in the headlines that I've seen over the last 5 weeks is businesses change their guidance. We're revising how we were thinking about the world in this year. And a lot of them have engaged consulting firms to rethink what this new world will look like because sometimes they peek around a corner that they didn't think about. They think about the different impacts of rates, they think about the impacts of tariffs, and they also think about the impacts on their other businesses. And I just wanted to close with this today, Naman. It's kind of an asterisk, but it tied into another story that we did last week on McDonald's. Krispy Kreme revised their guidance down yesterday, and they basically just said we don't even know what it's going to be. Like they were like, look, we're still getting there, we're still working on it, and largely they were revising it because they have a large contract with McDonald's. We saw last week that McDonald's traded down because they had a decrease in same store sales. The headlines were trying to say that that was a big macroeconomic indicator that fewer people were eating at McDonald's. I was a little less sure because I saw other businesses in the sector reporting different numbers. That's really what's happening behind the scenes in these businesses is that they're looking for help and they're looking for insight. They need it for this. They needed it 3 months ago before tariffs were even in place for AI, and that's not going away either. So we're actually seeing a kind of dovetailing boost inside the private markets sector for this specific kind of services.
I've never been more bullish on the consulting industry. I was talking to a firm earlier this week and they said their hiring is full speed ahead. And so they are looking for staffing help immediately. They're looking for staffing help already for projects that are in their pipeline for next year. Digital transformation is like at the tip of the spear for all of these companies right now in terms of what they're thinking about. They're thinking about supply chains. There's disruption in the healthcare industry. And so even when you go outside of what's happening with tariffs and trade, there's just a lot of disruption in the economy right now. It makes me think of the Bob Dylan song, The Times They Are A-Changing. And that's always good news for consulting firms.
Solid Friday reference, Naman. Well, thanks everybody for joining us today. Hey, if you've got a business that you want us to tease out, a market that you think is interesting, a metric that you think would be fascinating to understand, we are always open. You can ping us through the comments or you can also send us an email, team@managementconsultant